My name is Jeffrey Kennedy, and welcome to Trader's Classroom. You might think that prior price extremes, previous highs and previous lows, especially the ones that occurred a few weeks ago or a few months ago or even a few years ago, have little bearing on today's price action. Well, that really isn't the case. In fact, those prior price extremes actually identify very significant levels of support and resistance. And whenever you see a transition or a phase change, meaning when you see support become resistance or resistance become support, many times it all actually identifies a very significant change in price as well as identifying a potential trading opportunity. So let's begin. Now what we have here on this price chart, this is a 2-day price chart of Netflix, meaning that each price bar represents 2 days worth of price action. And what I'd actually like to show you on this price chart is just simply identify some prior price extremes. And the ones that I'm specifically looking at would be this extreme right here. Notice how prices, after that big sell-off, we bounced back up to the upside and then reversed and came lower. So this was a nice shelf or a nice area of resistance for the market. Now prior to that, you had another price extreme right here. This level right here actually acted as support. Now from an Elliott wave perspective, I most likely would identify this entire pattern right here as that of an expanded flat, where you have a 3-wave move down for wave A, a 3-wave move up to a new extreme, and then waves 1, 2, 3, 4, and 5. That's just more of a side note. But really what I'm focusing on is really to just simply try and identify the significant turning points, the significant extremes on this price chart. For example, we can take it another step further and identify this high here, as well as the extreme in price right here. So we have a nice area of resistance at this level here. And then of course, if we identify some of the swing lows on this price chart, we have a low here, and then of course we have some smaller swing lows coming into play here. So I'm utilizing the prior price lows, this one and this one, to actually identify support for this pullback. These price extremes here and here and here to actually identify resistance for that advance that we saw up in late 2014, early 2015. And then we can look at it or fine-tune it a little bit by looking at these intermediate swing levels, this one right here and this one right here, to actually identify support. So while you might think, again, that prior price extremes have little bearing on today's price action, well, you can see how this area of support, this area of resistance, and this area of support was also very significant for future price action in this issue. Let's look at another example. Now here we have CMI, Cummings, ticker symbol is CMI, and really what I'm just focusing on are prior price extremes, where we see these significant turns in price, like here and also here. Let's work up from the actual low. What we have is the advance, and then we have a price extreme right here. Let's just go ahead and identify that level. And then actually prior to that, if we move back to the left of the price chart, we have another price extreme here. So what this again is doing is helping me identify a stiff shelf of support or resistance in the market. Now once the market actually penetrated through that area of resistance, I will then look for it to at some point act as support. That's a very good indication of a significant trend change in a market, and as you can see, that's exactly what occurred in the months that actually followed. This area of resistance now acted as support. More importantly too, on this current advance to the upside, where did we stop? Where did we stall? Well, we had a price high here on the price chart, prior price extreme, and then if we continue to look back to the left, we have some additional levels as well. So this whole area right here, there we go, acted as resistance for that breakout that we saw here. We came back, support, then acted as resistance. We then successfully penetrated this area of resistance. Once we were through that, it then began acting as support. So these areas or these points or these transition points, what I like to call them, are phase changes that simply occurs whenever support becomes resistance and resistance becomes support. More importantly, it really does offer some very identifiable trading opportunities. Now let's look at a price chart. This is the dollar yen. And what I thought was interesting about this price chart were, again, some previous price extremes. For example, this one right here that occurred back in 2010. This was the high for 2010. It actually provided some nice support for this big move to the downside that we saw in 13. Here was a price extreme that was essentially the high of the year in 2009. Look how that area essentially acted as support for the consolidation of the correction that we had in 2014. Then we actually had the price high that occurred in the dollar yen back here in 2007, I believe. And that's where it now acted as resistance on the recent move to the upside. Even if we expand the chart or begin moving the chart to the left, you'll also again notice how significant prior areas of support and resistance and price extremes, for example, this low here back in late 2004, 2005, capped the move here in 2009, and then acted as support for the congestion in 2014. And we can continue it on. Here we have our essentially a double bottom that occurred between, say, 1999 and 2000, and then the sell-off here. So this whole area here, just a little bit above the 100 level, has acted as significant support, identified a great selling opportunity here, and also identified support for the subsequent move to the upside. Now let me show you some more real-time examples, or something that I think might be a bit more relevant for today's lesson. So today's lesson is very simple. Historical price extremes, highs and lows, the ones that occurred a few days ago, a few weeks ago, a few months ago, even a few years ago, they are relevant. They have meaning. They have meaning for today's price action. And really from a chartist perspective or a technician's perspective, what I'm looking for is those areas where you have a stiff shelf of support or a stiff shelf of resistance. Then I'm looking for those areas to be penetrated or broken. So I'm looking for those transition points, those phase changes where support becomes resistance or resistance becomes support. Many times, whenever that initial area is penetrated, whether it's a support area or a resistance area, you'll see what is referred to as either a throwback or a pullback, where you go back and test. Go back and say, test the underside. For example, in Las Vegas Sands. If you notice in this issue, we've had some nice support here for pretty much all of 2015 between, say, a little bit above $48 and $50 a share. Well, recently, we've now penetrated that area of support, and we're now testing the underside of it. Well, that's significant to me, especially when I begin looking at the price chart from a smaller perspective and see that the recent advance we've seen to the upside is an ABC structure contained within parallel lines. Now, I'm not beginning the wave count from the spike low here because we opened here, we closed here. Very little, I think spikes like this represent very little, say, psychology. And remember, from an Elliott wave perspective, the whole principle is based on pattern recognition and crowd psychology, and the belief that the crowd behavior is illustrated in price action through very specific patterns: motive waves, ending diagonals, zigzags, flats, and triangles. So whenever I see a price bar like this, again, that's more of a, say, possibly a stop running move, maybe even a bad tick. So I'm going to begin from this extreme here, and we have a very nice A, B, C, like the slope structure, the slope in wave A versus the slope in wave C. Straight zigzag formation, again, move to the upside, 3 waves contained within parallel lines, and again, right into what was once support. It is now acting as resistance. So I want to keep an eye on this issue as we move into next week and the week after in anticipation of a move on down to 42, maybe even back to the 40 level. Let's look at another price chart. What do we see here in Solar City? Again, interesting price chart, something that I want to pay attention to. Well, as you can see, what we've seen recently for most of the year, nice support area, a little bit above 45. This whole area. Every time prices have come down, we've advanced, we've come down, we've advanced. Of course, every time we've advanced, the advance has gotten weaker and weaker and weaker. So for some of you who may be familiar with that pattern that we've identified in Traders Classroom called a distribution wedge, this is kind of looking like a distribution wedge, but I don't want to talk about that today because that's not today's lesson. What we have done though, is we've penetrated this area of support. So now I want to look at this area to now act as resistance. That being the case, if I'm trying to identify a potential opportunity, I want to move to the smaller time frame charts, and it looks like we may have an A, B, ending diagonal C. Now, if that is indeed the case, we should know within the next few days because, as you know, whenever an ending diagonal terminates, we tend to see a sharp resolution to the downside. As of yet, I don't have confirmation on the pattern, but this is, again, an issue that I don't think is immediately actionable by any means. But as we move into next week's trading, I certainly want to put this issue on my watch list. Another pattern that or another issue that's kind of making the same type of signature would be in Microsoft. Okay, I believe we studied Microsoft when we were looking at the gap reversals, island gaps and whatnot. Now what we have here, let's just go ahead and start from scratch, eliminate everything. And really what I want to do is identify the key or important turning points. And we'll just begin by saying, for example, that was a significant low over here to the left. Of course, we have a significant high. And really, I'm not looking for a specific level, like say 49.27. I'm looking to identify ranges. And you can see so far we do have some significant areas. Points, say roughly the 49 handle. This was a nice little bit of a double top here in Microsoft. The low here and certainly the low here has provided support a couple of times for price action. And then we can look at some of the intermediate levels or intermediate price swings. For example, that extreme and the one over here. As well as, say, that, not necessarily that price high because that was the beginning of an acceleration gap, but maybe that price low. So you can see we're in a kind of a congestion point. Maybe move that line up to that swing low right here. And what you'll see is we are now able to identify what I call chart or natural chart resistance. So that being the case, interesting, the subdivisions or the width. Seems like this move here or this distance is somewhat equitable to this distance or equal to. So now let's move to the smaller term time frame chart and see if we have anything. Well, the move to the upside, I think, certainly does not look like an impulsive decline. That's an impulsive decline. That's a nice five-way structure. The move to the upside so far appears to be contained within parallel lines. Again, I don't know if I would consider this to be immediately actionable, but I do think it interesting that we have nice chart resistance here between, say, 43.75 and 44.50. We've gone up 1, 2, 3 times. We have not been able to penetrate that area. If we put a larger Elliott wave pattern or larger Elliott wave structure, and we can identify wave 3 complete here, or we can actually even move it over here to the left and maybe work, say, A, B, ending diagonal C wave, or a more complex structure here. But the overall idea is that this is an impulsive decline. Waves 1, expanded flat 2, 3, WXY for 4. Notice the lower boundary line of the base channel coming into play. Now again, what we've looked at today as far as, say, Las Vegas Sands and Microsoft and Solar City, I don't know if any of these are immediately actionable in today's trading. But it does blend in well with what we're discussing as far as today's lesson. Prior price extremes, previous price highs and previous price lows, whether they occurred a few days ago, a few weeks ago, a few months ago, even a few years ago, they do have significance as far as today. They are relevant, especially when these areas which are tightly bound, these areas which are very close and nearby one another, they create very tight clusters of what, again, I consider to be natural chart resistance or natural chart support. What's very important is when we see an area that's been support for some time, where the market seems to always react to, and then we penetrate it, and then it becomes, in this instance here, this was a nice support area. Now it's acting as resistance. Again, this is what I consider to be a transition or a phase change. Many times it's an indicator or for a very strong confirmation of a significant trend change in a market. And also too, from a trading perspective, many times these tests lead to very significant and sizable price moves and certainly some very good trading opportunities. You guys have a great weekend, and I'll see you next week. Thank you very much.